Whilst the rest of the world has been worrying about other things, crude oil price has been sneaking stealthily on upwards, and WTI has recently reached the early 90s. But has it done enough? Can it get to that 100, or is it going to pull back? Well, in this week's report, I'm going to take a look at the technical analysis and the bigger picture and see where it could be heading next. So let's have a look at the analysis. Let's start with some sentiment-based technical analysis. Down the bottom we have seasonality, and it's still holding strong really through to the springtime, March sort of period, bullish there. Interestingly, the commitment of traders data, that's the red line and the black line that you can see on there. Well, the red line is doing as it should, inversely moving with the price, whereas the large speculators, the black line, has been pulling down as the price has gone up, and we expect that to be in tandem with the price, and it's not. So it's telling me maybe a bit more neutrality and unsuredness in the market there at the moment for pushing on upwards. So overall though, sentiment factors still weak, bullish overall. Baker Hughes rig count numbers still looking good from the point of view of the energy sector. +3 change from prior count, looking at that US line there, and change of 221 from the prior year. For those who follow, the inventories, a better than expected number, minus 1.046 million barrels last week. This week forecast for 0.675 million barrels, numbers out GMT time 3:30 in the afternoon on Wednesday. Not a lot really to add to the weekly line chart data. The obvious, it's been in that strong climb up since those negative numbers back in spring of 2020, and I suppose the takeaway here is that Fibonacci line was left on from previous weeks. It bounced off that, and we could, a serious pullback, take it back into the mid 70s inside that yellow block, but at the moment it's still looking pretty strong. For the bear price reversalists out there amongst you, then the 4-line break chart gives you entry points at 88 if you're more aggressive, or 85 3/4 if you are more conservative to the downside, and time that in with a stochastic below that. The daily Heikin-Ashi showing us at the bottom there, the two signals both pulling back a little bit more neutral overall. Volatility slightly climbing back towards its longer term average, around about 20% per annum. Volume trading around its longer term moving average, and price action trading steadily in between those, the regression to standard deviation pink, light blue bands there. We've got a buy signal from the 2-line pink box breakout set up above that purple triangle pattern. So all in all though, we can see a nice strong trend and that price continuation with a little pullback in the price at the moment. Onto the Renko chart with a 50 cents block size. Well, we've got mixed signals at the bottom. The shorter term stochastic and regression pulling back against the longer term bullish trend. In terms of price, still trading above its longer term moving average. Price moving back inside the two pink line box breakout system, so neutral there. In terms of Fibonacci potential targets, and upsides $100 next if we can break those $92 highs, and then $109, $110. Pull back down to 61.8% line in the mid to late 80s isn't out of the question either. But overall, it's a strong uptrend really over this year so far, and we're going to wait and see whether this is a more serious pullback to join back into that longer term trend, or something a bit more significant. But at the moment, overall pretty bullish. Bit of a downgrade from my previous report. I've come in with a weak bullish score, with the price that it's based on that slight pullback. We've hit those new highs in the early 90s. Going to see what happens next, see whether it turns bullish once more, or has a more significant pullback, like I said, into that sort of late 70s, early 80s sort of zone. Heikin-Ashi and Renko chart, like I said, both weak bullish. Other factors, seasonality still quite strong. COP neutral, rig count bullish, line break chart there, bearish for you, price bears. And if we go into the targets, then it's pretty good to see outside, really, because of a tight stop for the risk reward numbers there, 4.5 and 9 to 1 to the upside, and downside 1.6 and 2.2 to 1, but overall weak bullish score. So the question is, will we see $100 anytime soon? Well, a Russian-Ukraine jolt might spur that on back past the 100 and even onto that $110 area. If not, we could even see a $10-15 reversal back, like I said, to those sort of late 70s, early 80 sort of dollar mark. So an interesting time for WTI at the moment. So let me know in those comments below where you think it might be heading next. Love to hear from you, and if you've liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future content notifications. And all that's left for me really to say is thanks for watching, good luck with the trading, and I'll see you in the next video.